Yo yo yo, what is good guys? Welcome to another video. And if you made it to this video, I'm happy because I haven't posted in a while, to be honest. But I'm gonna finish the bootcamp that I started. I first posted those four videos that really sucked. The quality wasn't the best. It was rushed. So I decided to redo the whole thing, and that's what I'm doing right now. And I hope that now uh you guys can really learn, and I hope that these videos really help you guys that want to start getting into trading or that already know about trading but just want to learn the whole supply and demand concept. uh and yeah, that's it. Let's get started here into the video because I don't want to take much time here yapping and talking a bunch of shit. So, you guys see a list here, right? That says earnings reports, news, income statement, balance sheet, all this stuff. These are all thoughts and perceptions that reflect in the chart one thing, buy, no, two things, buy or sell, but they reflect in one thing, which is price movement, you know? And price movement comes down to either buy or selling, all right? So, when a trader looks at the chart, for example, ICT, my bad for like name dropping him, but just saying him. ICT, he looks at the chart and he goes and he says, "Oh, the algorithm is moving this, right?" That's something ICT would say, which he's not wrong. There is not one. There are many, 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 many algos running. Every like a bunch of institutions and maybe every institution. I don't know if there's an institution that runs without an algo. Uh, but it all reflects in price movement, and it all comes down to buying and selling, and that's what traders think when they look at the charts. But we as supply and demand traders, we go deeper into that. Okay, we go deeper into the chart analysis. Why? Because we understand that the charts show failed orders through time. Okay, and what is failed orders? For a candle to once a candle is like printed. Okay, you have a five minute candle and the 5 minute, yeah, candle, and it's boom, printed. It's over. Okay, and the next candle is about to print. That candle, for that candle to go up, or balanced, whatever, orders had to be filled. There were agreements between buyers and sellers, and transactions were made, so orders were placed. And those orders were filled, and they were displayed within that time frame that you were seeing. Get it? So, we understand that the charts show filled orders through time, which are the candles that have been printed, right? But our job as supply and demand traders is to find where institutions left behind unfilled orders. And they leave behind these orders in these zones. Okay? So, a demand zone is going to have institutional orders inside of it, waiting for price to tap into it so it can go higher. Vice versa for a supply zone. Okay? So let me pretty much tell you, okay, one thing here. Filled orders are the orders that already happened through time. Already happens through time. They're gonna show up as candlesticks, wicks, okay, highs, lows of the candle, the volume of each bar. It's also the filled orders, okay. The volume of a million. It's a million contracts traded. You know. Uh, so the filled orders tell you what already happened. Okay, it's pretty much okay. Okay, the filled orders are telling you the story here. But the unfilled orders are different because the institutions, they cannot get all their orders filled at once. So they need to create these areas in which once the price comes back into it, it taps them in and it goes back in their direction. You get it? They create these zones. It can't be, if you think about it, it can't be a singular price point. For example, ICT, not ICT, but majority of the traders, they like to claim that liquidity is sitting just above highs, below lows. Okay? Which, okay, yes, there is liquidity there. There's liquidity everywhere, actually. But yes, maybe there is a greater concentration of liquidity in those areas. But that just because we're gonna break and stop people out doesn't mean that there isn't liquidity here or here or here or here. You get it? Like it's a whole general area. It's a zone. It isn't just one singular price point. And that's why me personally, I like supply and demand over uh ICT. I've researched the concepts uh and all, but in my opinion, supply and demand just makes more sense because you're looking for the general area and not just pinpointing an exact point. But at the end of the day, everyone trades differently, so let's keep going here. Okay? Boom, 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 boom. I wanna talk about this now here. Here, as you guys can see, we have price going up. When price is going up like this and we have consecutive candles closing above the previous one, we call that a rally. All right? When price is pretty much going sideways here and we don't have a direction, we call that a base. And price when price is dropping, all right, that's a drop. Rally base drop, all right. Just keep these things in mind, all right, because these things right here are important. We're gonna talk about them really soon. And now that you already know about unfilled orders and everything, let's move on to the next thing here. Okay? It's gonna be like a soup of content. There's a lot of things that you guys are gonna have to digest before we get to supply and demand. Now you already know demand zones, okay? Let's refresh. What are demand zones? Demand zones are areas of unfilled orders that institutions left their unfilled orders behind, okay? So institutions they create these areas in the chart which they keep their orders there and they haven't been filled. When price comes into that area, the orders get filled and then price moves in the direction that the institutions want to send it. You know, whether that is for supply or demand, you are going to find out how to identify those areas. That's pretty much it. So let's keep going here. Boom, right here. Y'all remember this rally base drop? Let's talk about the base first. What because I just said look at this and I didn't say anything, right? Didn't define anything. So, what is a base? A base is when prices remain within a defined price range over a period of time. So, here this is a sideways trend. Cool, I get it. Sideways trend. But price is just basing, you know? It's and during a trading range, unfilled orders are being filled. So there's a bunch of unfilled orders here. They're being filled, and price is gonna break out somewhere. Whether it's up or down, I can't tell you. We gotta wait for it, wait and watch. You know, we can't guess because if you're seeing price come down and you're guessing that we're gonna break below this low, maybe we do, but if we don't, we might get a bounce back on up, you know? Same thing vice versa. Price is going up and you think we're gonna break above here, maybe we do, you know? But we might get a rejection, so we gotta wait it out. And in these areas, uh, supply and demand are balanced, okay, in these basing areas, and institutions are looking to accumulate or distribute, okay? Accumulate to send higher, distribute to send lower. And it looks neutral right here, neutral in appearance, okay? And these bases, you see how the candles they're not closing up above or below? They're pretty much static here. So that's it. That's what a basing is means, you know? Now let's talk about rallies and drops. Okay? Boom. Rallies and drops are right here. Let me send that right there. Boom. So Pretty much, a rally is when price is just moving higher and breaking out. All right. So a rally is when prices move higher, resulting in an explosive rally after a period of balance. So as you guys can see, look right here, price was balanced, right? Boom. This is an explosive rally right here. This is balance, and then this is sort of a drop, and then a rally, and then look, drop, and then right here I see some balance, but then I see price going back on up, and then this is balanced right here. Okay, but this is an explosive rally right here. Boom. It's just we call these candles right here, these very boom, these very strong candles, the lag candles. Okay, lag candles. All right. So more willing buyers than willing sellers at a particular price results in an increase in price relative to a previous high. So there were more in this area here, there were more buyers than sellers that caused price to go higher and break above this high. Just keep all of this in mind. This is an explosive rally right here. And then what is an explosive drop? Well, just the opposite. Prices move lower, resulting in an explosive drop after a period of balance. Price was balanced right here, and then from here, from this point here, lower. So you guys see, look, it went lower, then it made a lower high, and then boom. You guys need to, you guys also gotta understand that price went from up there to down there. You're reading price, you're reading. This is how you properly read price action. You cannot ignore highs and lows like this. A lot of people they don't know how to read trend correctly because I don't know what is wrong with them, you know. They simply ignore everything. But look, high, low, lower high, break down right here. This was already your first sign of a downtrend. And then we have a bigger one right here. But never mind for that. More willing sellers versus willing buyers at a particular price, resulting in a decrease in price relative to a previous low. So price just went lower here, and that's what we call an explosive drop. All right, leg candles are a series of leg candles dropping, consecutive lower, and resulting in a new low in price. And rally is just the opposite. What is not an explosive rally and not an explosive drop? It's just when we don't get a breakout or a breakdown. Look, price went up, then it balanced, and then it went down, but we didn't break through anything. Price went down, and then we balanced, and when we went up, it didn't break through anything. Now price is coming back down, but it hasn't broken out of any highs or lows. Breaking out of highs, we're getting rallies here, explosive rallies, breaking out of lows, explosive drops. And these explos these these strong candles here, we call them lag candles, okay? So lag candles represent the greatest imbalance between supply and demand at the origin of the lag candles, okay? Typically bullish or bearish in appearance, okay? And they tend to close outside of the, okay, of the range of the preceding candles. So this closed outside the range, okay? This right here also closed outside of the range. Look, this is a great leg candle, you see, because it closed outside of this range. So leg and then base, you know? Let's keep going here. I want to talk about this now. What are some novice mistakes that a lot of traders they make? Well, very easy. They they buy when price is hitting they buy when price is hitting supply. As you guys can see here, we have a supply zone. We'll get to how to spot supply zones and everything. But here we have price hitting a supply zone, okay? And then the novice traders, they're buying when we hit supply. And that is the biggest mistake you can make, okay? And so we have for right here for sellers. Sellers are selling when we hit demand. Okay, and that is one of the biggest mistakes you can also make because professionals are buying when we're hitting demand. Professionals are buying, okay? And then the novice traders, they're expecting price to keep on going lower because a novice trader, he sees this. Oh, price went up. Okay. Now it started to distribute. Okay. Okay, now we're going lower. Okay, now I should keep on going lower. Let me sell. Boom. Goes back on up. Same thing right here. You know, the same thing right here. So that is the biggest mistakes that traders make. All right. Now I want to talk about this. This will be important. This right here, this is a trend. This whole picture here, when I show you this picture, I'm showing you the sideways trend. Okay? Now we are going to talk about the candles in itself, just the candles alone. Okay? Because by looking at this, you can say, all right, this is balanced. Yeah, cool. And this is also balanced. But what about just a singular candle? Can you tell which one of these is balanced and which one of these isn't? That's why you must understand this candle range interpretation. Alright? Why? Take a look at this. Range of the candlestick. This is how we read the candle from where they open. So if this is for bullish candles, if the candles are bearish, just flip this upside down. So if it's a red candle, flip this upside down because this is essentially the open. So this is a bearish candle, this is the open. This is a bearish candle, this is the open. You know, this is a bearish candle, this is the open. So, if you don't understand about opens and closes and all this terminology that I'm talking about, go to my previous videos because the everything that I have been posting is the information that you should already be understanding at this point. This point, that's why I decided to leave supply and demand for less because I feel like it's the most not complex, but it's the easiest one in the chart. Like you guys are gonna, I'm scared you guys might go out in the charts and start marking a bunch of supply and demands on just like getting stopped out left and right because that's what usually happens to everyone in the beginning. But uh like lock in. You know, if you don't know what I'm talking about, go to the previous videos and watch everything. But let's keep going here. Candle range interpretation. When a candle opens, I just look at it whether it's bearish, bullish, or neutral. All right. So I want you guys to look at this and look at this and tell me what do you guys think. Now it's the moment that you guys actually gotta look at this, and put in the work. All right. Tell me what do you guys think these candles are? The first one, it's very I'm not gonna say very bullish or very bearish. I'm just gonna say whether it's bearish, bullish, or neutral. All right. So the first one, it's bullish. All right, because it opened here and then it closed all the way up there. All right. And if price closes within 80 to 100% of the range, it's very bullish. What is the range of this candlestick? It is from here to here. It closed all the way up there. It's very bullish. Number two, what do you guys think? Number two, it's bullish. All right. Why? It's upside down. Price opened all the way up there. It went down there and then it closed within, I'd say this is 60 to 80% of its range here, right? To the upside. So this is still a bullish candle. All right. What about this here on three? Candle open here. Boom. Boom. All right. In my opinion, this is somewhere in the 60 to 100, 80 to 100. I'd say 70 to 100, 80 to 100. So this right here, it's bearish. All right, because we opened right here, price went up, and we closed all the way to here. Boom, bearish. This is a bearish candle. All right. What about this one? Well, price opened up, it shot higher, and then it came on down. This is also bearish. But look at the range here. It went up and then it went back on down. It is bearish. All right. Now let's take a look at this right here. This one is different because price opened up here. It went all the way down there. All right. Then it went all the way down there, and then it closed right here. So this one, I'd say it's in the 40 to 60%. So this number 5 here, it is a neutral candle. All right, neutral candle. What about this one here, 6? I'll give you guys some time because 6 is a bit harder. People you tend to get number 6 wrong. So, all right, time is up. What do you guys think 6 is? Remember, it is the range of the candlestick, correct? So, if the candle opened here, it went up and then it closed, it went up and then it closed, it's very bearish. What else? What else could it be? It's bearish. This is a bearish candle. Alright? A lot of people might say neutral because of the way it looks, but we're looking at the ranges, not at the way the candle looks, you know? It's the ranges. Alright? Now, we have talked about base, we have talked about rally, we have talked about drops, right? I said for these big candles right here, want you guys to call them lag candles. It's missing a couple of pictures here because we're gonna get to it, all right? But for right now, just call them lag candles. Why? Because I had a quiz here. But this quiz is low key ahead of the time. So let's get straight into supply and demand first. Boom, right here. Boom. These are the supply and demand zones that we look to trade every day in the charts. Right here. Boom. Okay. And what are these zones? There are four zones. Two for demand, two for supply. Okay. And here are a picture of the supply zones. So we have a rally, base, drop, RBD, rally, base, drop. Supply zone number one. Supply zone number two, it's the drop, base, drop. Okay. DBD, drop, base, drop. And these are the demand zones we have right here. Drop, base, rally, DBR, drop, base, rally. And we also have rally, base, rally. All right. Uh, these are the four types of zones we have. We have two for demand, like I said, and two for supply. And a zone consists of three parts: a leg in candle, a leg out candle, and a base. Alright? That's why I said I was low key ahead because this right here should be for now. So let's just lock in here and then we'll get to there. So the leg in candle is the candle that comes into the zone. Alright? The leg out candle is just the candle that moves out of the zone, and then the basing is pretty much the neutral candles that make up for the demand zones and for the supply zones. And all these zones are where these unfilled orders are going to be sitting are price chart patterns, candlestick patterns, and this is how you spot them. All right, by looking this is pretty technically how you spot the supply and demand zones that I've been talking about so far. And so, my bad, had to drink some water there, but hold on, let me drink a bit more. Mmm. Who doesn't love some water? Well, let's get started here. My bad, let's get back into it. So, A zone consists of three parts, right? The leg in, the base, and the leg out. Cool. Now, uh, for the drop base drop here, this is the leg in candle. Alright, this is the base, this is the drop. This is the leg in candle, this is the base, this is the drop. Okay, so I want you guys to look at this now and tell me whether it is a leg or a base candle. Alright, which one of these is a leg and which one of these is a base candle? I will tell you guys in a couple of minutes. Nah, my bad. A couple of minutes, not a couple of seconds. Once this hits 45. So now, this is a leg candle. This is a base, leg in candle, base candle, leg out candle, leg in candle for this zone, and leg out candle for this zone. Alright, this is a base. This is a base. This is a leg out candle. This is a leg in candle for this zone. This right here is a base. This right here is a leg in candle for this zone. And whatever this is here, if it comes from whatever, it's a leg out candle. This right here is a base. And this is a leg in candle for this rally base drop, or a leg out candle for whatever it's to the left here. I'm not gonna be an engineer and say there isn't nothing, but I'm not gonna be blah blah blah, you know. Boom 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 boom. So we already talked about supply and demand, right? As you guys can see here, all these zones are a change of direction. So we have the leg candle, the base, then the leg out. Look at the change of direction. Boom, boom, boom. And essentially here there is a this here forms an area of unfilled orders. This basing here is where the institutions have left behind their orders so they can get filled and we can go higher. You know, that's the accumulation that we look to get retests of. So all it is a retest of accumulation areas. That's the whole everything that this strategy is. Look, accumulation area, distribution area, and then when you retest it, you know, nothing too crazy. But then boom, here, let's talk about the zones a bit more. Okay, what is this here? These are the ways you can place your line and mark out your zones when you go to mark them out. Alright. So, for supply zones, alright, drop, base, drop, and rally, base, drop, this is how you can mark them. You can mark them like this, which is wick to wick, okay, which you do get more fills in. So you're gonna be filled more times, alright, but it's less profit, you know, much less profit. Uh, The optimal one, which is the one that I always do, is the proximal to the distal. And what is the proximal to the distal? It's proximal, it's the line that's closest to the current price, and distal is the line that's farther away from the from price, and that's just how we name them, you know? So proximal out of the zone here. Let's say I'm drawing out the demand zone, right? And this is the demand zone. This right here is the proximal line, and this right here is the distal line, alright? And the distal line always has to stay at the bottom of the zone, and boom, right here, or right here, you know, like this right here would have been like this. You see the example? Uh, so yeah, but how I mark my zones is exactly how you see in the pictures here. It is the preferred one. So proximal line at the highest body in the base. Highest body in the base. Some people like to put their proximal line at the highest price in the base. Alright? I like to put it the highest body. Some people they like to put it at the lowest body. So the lowest body would be right here. All right. And you get less trades, but way more profit. Way more profit. But I like how I trade, so I like I like to keep it there. And here are some real live examples of the zones in the charts. Boom. Here we have a drop, base drop, supply zone. Price comes back into it. Alright. Institutions put in their orders, they get their orders filled, and boom, we move in their direction. Even though you may not think, or you may look at this and you may say, oh no, this is some bullshit ass zone. This bullshit zone ran a 10 to 1 risk to reward. So that's 10 times your reward, you know. And look at that. Same for this one. Look at this one. Boom, boom. That's a 10 to 1 right there. You know, this is a drop based rally zone. This is a rally based rally. Rally based drop. Drop based drop. Alright. Let me see if I have anything else. No, that's everything. Alright, that is everything about supply and demand. Nice, nice, nice. Now let me go to the charts and show you guys some examples. Because I've been dying to show you guys some examples. Some examples. Boom, boom, boom. Let me play out some price action. Look, right here, I can already spot a strong supply zone, a rally base drop. So I'm gonna keep that in mind. There's something here that's interesting. There's this nice drop, base drop right here. You can do wick to wick or body to wick. And then there's also this drop, base, drop. Look at that strong move out. There's also something here. Just marking out a couple of supply zones. What about for the demand zones here? Let's zoom in to price a little bit. As you guys can see, I was very zoomed out here. So let's zoom in a little bit more. For the demand zones, there's this here. And the reason why I'm marking this is because everything has been, it's a test of this. It's just an experience thing. I know what I'm doing. These are the zones that I like, honestly. Now we just wait. Okay, now you guys can see price broke out, right? Price broke out of that high. Had we gone lower to a 30-minute, look at this. Retested, and now it should go higher. Okay, nice. Now there is a zone here, rally base rally. Price should retest into the zone and go higher. Or no, just go higher. Damn. Look, there's another zone here, rally base rally. It's already going higher though. It's already gone without us. Oops, now we broke through the zone. That happens. Part of the process. What is going to happen here? Boom, price broke out and it's retesting. You want to take longs right now as we come into this demand zone here. That's the test of it right there, and you're in the longs. Ooh, you're making money. Ooh, you're up hella. Oh my god, look at that. How does this work, yo? You would have been filled right there with your stops there. And you're at a 3 to 1 right now. Who cares about the loss you just took? Is this gonna touch our supply zone right there? Let's see. Getting close to it. Ooh, price got super close, and look at that gorgeous rejection. God damn. But in my opinion, we can still come back to here and shoot lower, or we could see a bounce from here. Let's see. This is a gorgeous drop base rally. Oh my god, price got so close to it. I mean, bro, you gotta be joking with me. Oh, look at that, another gorgeous rejection. So close from our supply zone. We're gonna tap into the supply zone and sell off. Just watch. Maybe not. Ah, no. Damn, cracked through the supply zone. It is what it is. I wouldn't take longs from there anymore. If you want anything, boom, there's this here. But right now I'd be looking to take the shorts. We're hitting these supply zones. That's my goal for right now. So, boom, that's me getting tapped into my short. Okay, I'm in it. Oh, gorgeous trade. That is it. That is it. I wasn't even looking to take the longs. I wanted the shorts either way, so fuck that. And let's see, did we ever break through the zone? Never. Look, 8, let me delete this so you guys can make sure. 8, 6, 25, 8, 6, 25. Cool. I'm just back testing here and hitting some banger trades. Fire. Look, this ran 7 to 1. Momentum should keep on going higher. Nice. Okay, now he broke out. What does this mean? It means that some other supply here is gonna hit and work because we're pushing higher. Just wait a minute. There's something here. You guys see these sweeps here? ICT? ICT? Where you at? Where you at, ICT? No, I'm joking. There's this, yeah. It's because we're tapping into this one big zone. This is a drop base drop here that look tested. Now we just gotten into it, so I don't doubt market will start selling off sometime soon. Uh, if I were to take a refined entry, yeah, fuck it, we ball. You know, you can try to do this. Oh, I said the market was gonna sell off, and it did. Trend is just continuing here. This is the man zone that's been holding the market. Drop base rally. Look at this strong move out. Retest. Been holding the market. Now we're gonna break through it. Gorgeous. Watch this. We broke through the uptrend, right? We have a downtrend, but price is just faking traders out. If you're gonna find anything, there's one big zone here. Not even that I'm a fan of. You know, there's all of this liquidity right over here that price should honestly come and break down. If you want anything, you're better off just taking the shorts from here. Then you see price is going lower, like the supply zone is holding and we're making new lows, but there's so much demand. It's gonna be hard for us to grind through all of this, you know? You gotta think of this as one big block of orders that price. This is more of discretionary trading. This is sauce, you know? But yeah, right now here, what I would do is if I was in this trade, I would have been filled right there, maybe. I don't know. I don't know what I would have done here. I'm just saying, just trading, how I trade. Uh, what would I do? Real shit. Move stops to break even, bro. We just broke under this low. Momentum is either gonna continue or stop you out. And that's what I said, you know, stopped at a break even. But then look, we're gonna tap into this zone here. I'm very interested in getting in these shorts. Very, very interested. What I would do is this. Boom. Oh no. We made a new high. Failed the low. Now we're going back on up. Boom. That's it. You're filled into the shorts right here. They already hit a 2.6 to 1. Ooh, this is sexy. This is when I dance. You get it? This is when I make thousands, thousands, thousands of dollars, when I get into this short position and we just print, because I said get into the short and we hit a 11 to 1, you know? And yeah, I mean, this has been enough of me back testing to show